Hello, speaking Forex. This is Gregory. It's currently 10 after 10 p.m. Pacific Standard Time, August 5th, and this is my analysis for August 6th. Okay, let's do some analysis here. Basically, what I have on my screen is a chart of the Euro Yen. This is a 4-hour chart, and we have an interesting situation and low risk, high probability. So, I like to play the odds and stuff like that. So, here we go. All right, so if you look at this particular slope, you notice that um, we had support that turned into resistance. Okay, we had a rejection here, and then also we had another rejection last week. So now we get here again today, and we have another rejection. We have here the purple line. We have support that turned into resistance. However, we gapped above that, but now we closed beneath. Also, we closed the gap that was formed today. So this basically tells me that this market wants to come down, at least retrace a little bit. So I'm going to look for a shorting opportunity. Now this is a 4-hour chart, so this may take a couple of days before everything manifests according to our analysis, but that's what I'm looking at right now. So currently we're trading at 97.20, and I'm targeting 96.13, 9600 around there. I haven't done my pivots yet, but looking for a pivot number around here for my number one target. And my second target is going to be somewhere along this bottom slope, maybe 95.20 or something like that, depending on the pivot on that particular day. So let's do some fibs and let's look for some convergence areas to see exactly what this market can potentially do. Okay, so if you notice, let me just try something right quick. All right. Let me take out the fibs because I don't want to clutter the screen just yet. This second purple line here, which is around 96.37, you notice that we had support that turned into resistance, and so I expect price to stall around this area. This particular area here is what I call a congestion area. I expect price to stall around here because of this congestion that we had prior. So even though I think my second target, because my first target around here I think is going to hit with higher probability, the second target is going to be a little tougher. And what may happen is that once price gets here, it may pull back and then decide to come back down. I'm not exactly sure as how it's going to happen, but it's one of those things that I have to read and react. I have to wait until the market gets there and analyze and see exactly how this market is going to, what's the best way to play it. So I don't know what's optimal at this point, but once we get there, I'll be able to get a better read on what's happening. But I think that this first target is actually pretty good. So if we get in around 97.20 and target, let's say 96.20, that's about 100 pips right there. So that takes care of the risk, because now that we're here, you want to place your stop initially above this high. And what I normally do is once I run my retracements, and once I get to the 23% or possibly to the 38%, what I do is I bring my stop to break even. And plus we have the gap here. This gap can serve as a nice little protection as well. So bringing your stop above, let's say 97.50 or something like that, once we get confirmation that this price action is going to hold, that'll be a nice little reward to risk ratio. So risking, let's say 30 pips, initially you're going to risk 70, but once you get confirmation, you're going to risk about 30 to 40 pips. Our first target is going to be 100 pips away. Our second target is going to be about 200 pips away. So that takes care of your risk. So you don't have to really be right that often. You're looking at probably being right about 30% of the time just to break even. And after that point, you're just really managing your trade to make sure you try to minimize your risk and maximize your reward. So ultimately, this 50% area is a beautiful target because of the convergence of the previous support that turned into resistance. We have traffic here, as I discussed earlier, but if we can penetrate that, we can probably get to the bottom. It's anywhere between the 70% and the 89%. I think ultimately the 79% would be a good target, just depending on the time and which day it gets there, but anywhere, if you want to be conservative, I think 70% would be a beautiful target as well. So anywhere around there. And what may happen is actually price may bounce and pull back before it comes down further for the second time. And if that happens, that'll be a great buying opportunity